Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of business and finance to make it simple. And for today's filing, let's just say this company is really trying to make sure everyone knows exactly how much their shares are worth and what they're doing with your money. So buckle up if you've invested in Hines Global Income Trust. This report is a big deal for you. We're diving into a filing from Hines Global Income Trust Inc. And what's really interesting here is how they're handling share prices for both reinvesting your dividends and for when investors want to cash out. They're telling us their share price as of the end of July last year. They report a transaction price of $9.79 per share across all their different classes of stock: Class T, Class S, Class D, Class I, Class AX, and Class JX. Now this price is basically how much your dividend is worth when it's reinvested to buy more shares, or the price at which they'll buy back shares from you if you decide to sell. It's important to note that these prices are rounded to the nearest cent for us, but for actual trading they use prices rounded to 4 decimals, so it's a bit more precise behind the scenes. What's really crucial to understand is that this transaction price is actually the net asset value, or NAV, per share as of July 31, 2025. The NAV is a way to measure the company's total assets minus its total liabilities divided by the number of shares outstanding. It's a snapshot of what the company is truly worth on a per share basis at a specific point in time. Let's look at the actual numbers that make up this NAV. As of July 31, 2025, Hines Global's real estate investments were valued at a substantial $5,151,556,000 other assets. Added another $521,029 on the other side of the ledger, they have $2,230.51 in debt and other liabilities. When you put it all together, the total net asset value, or NAV, for the company was $2,782.231. For the company was $2,182.28 and $782.29. On the other side of the ledger, they have $289.51, which works out to that $9.79 in debt and other liabilities. When you put it all together, the total net asset value, or MA, for the company was $2,700 and other liabilities. When you put it all together, the total net asset value, or MA, for the company was $2,204. Now compare this to the previous month, June 30, 2025. The NAV per share was 9.84 cent from a total NAV of $2.7, so 51 times 5 4 15,000, so 15,000. So the 71 full date fails a slight dip in overall value per share in a single month. This can happen due to various market factors or property performance changes. How do they figure out these values? Well, they have a dedicated valuation committee made up of independent directors, and they follow a detailed valuation policy. This policy uses a bunch of methods to calculate the MB. They also rely on HG Advisors LP, their advisor for property valuations, which are then reviewed by an independent company called Altus Group US Inc. Altus basically double checks the calculations and gives a nod of approval. It sounds like a robust system designed for accuracy. The report also gives us a peek into the assumptions used to value their real estate. For office properties, the exit capitalization rate, which is a measure of the expected yield when a property is sold, is 6.93%. And the discount rate used to calculate future cash flows is 8.158% and 7.23% respectively. These numbers are important because they directly influence the property valuations. They also show us how sensitive their property values are to changes in these rates. For example, if the exit capitalization rate drops by 0.25% across all property types, the value of their real estate would increase by a weighted average of 3.01%. Conversely, if that rate increases by 0.25%, the value would drop by 2.70%. Think of it like this: a lower cap rate means investors are willing to accept a lower return for the property, making it more valuable, and a higher cap rate means the opposite. It's a direct reflection of market sentiment and risk. Let's talk about the dividends. For July 2025, the company declared a gross distribution of $0.052 shares, have a distribution and stockholder servicing fee of $8 fees involved. Class T shares have a distribution and stockholder servicing fee of $8 rind and 445 class. Class D shares have a distribution is the full $0.045 or 52. Class D shares have a smaller fee of $1.44. Access shares have a smaller fee, resulting in a net $0.0 shed for 447. Class D shares have a smaller fee of 444.70 for rare share dollars, smaller for 2 sets with a $1 August. As of the end of July last year, Hines Global owned interests in 50 real properties. These properties were 96% leased and offered about 23.4 million square feet of space. The portfolio was leveraged at 31%, meaning about 31% of their assets were financed with debt, based on the property valuations at that time. In a recent move, they acquired a property called Montrose Collective on July 9, 2025 in Houston, Texas. This is a retail property covering approximately 189,000 from June to July. Finally, the filing includes a few exhibits. Exhibit 99.1 is their valuation policy and procedures, which is a pretty important document for understanding how they value everything. Exhibit 99.2 is the consent of their independent valuation advisor, Altus Group US Inc. And Exhibit 10.4 is the cover page interactive data file for those who like to dig into the raw data. So what does all this tell us about Hines Global Income Trust? Well, on the surface, they appear to be running a pretty tight ship. The NAV per share is consistently calculated, and they've got a clear process for it, with oversight from independent directors and external advisors. The slight dip in NAV from June to July isn't a red flag on its own, but it's something to watch. The fees on certain share classes are worth noting if you're a shareholder in those classes, as they do eat into your returns. The acquisition of Montrose Collective shows they are actively growing their portfolio. On the risk side, as with any real estate investment trust, changes in interest rates and market conditions can significantly impact property valuations, as shown by their sensitivity analysis. If those cap rates or discount rates move unfavorably, it could directly reduce the NAV per share. Also, while they have a share redemption program, remember that shares held for less than a year are redeemed at a 5% discount. This is a common feature to discourage short-term trading and maintain stability. Overall, Hines Global Income Trust appears to be prudently managing its assets and providing a good level of transparency about its valuation methods. For investors, understanding these NR figures and the underlying assumptions is key to assessing the true value of your investment. Alright, that's our breakdown of Hines Global Income Trust's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more community discussions. Thanks for watching. See you next time.